Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the euro currency. So overall background currently is very tricky, stance on the market, and in today's fundamental report we just have got the confirmation of the risks that we announced even 1-2 weeks ago. If you remember, we have talked a lot about our suspicious on the poll results. If we think that they skew the information, and we think that the real gap between Donald Trump and the Biden stands significantly smaller. Another risks that currently is widely discussed in mass media between analysis is that it could be real postponed in the announcement of the elections result. This is first moment. Second, it's a lot of scandals, frauds, and legal claims could be from both parties, depending on who will lose the elections. All this stuff makes investors nervous and keep overall situation murky. We also do not exclude a lot of possible social unrests in the United States. If you remember, in the first elections, when Donald Trump stayed the lead, it was social unrests across the United States that triggered by the Democrats that was disguised as there's some financial protests and Occupy Wall Street and so on, but in reality that was the light attempt to take the government of the country by the force, and well, it was not very strong, but still it was not quite pleasant for Donald Trump administration. This time it could be even stronger, so we would not exclude this ultimate situation in the worst scenario. Investors are very careful in assessment how it could be and how it could turn and what results will be on the markets. Most anticipation stands that in a Joe Biden victory, the United States dollar should become weaker. Small stimulus will be provided, and overall position of the Democrats stands in favor of the growth, providing more stimulus. Weaker dollar probably. So currently markets significantly priced in this result, but we think that it's a bit too early. The market underestimate the possible different scenarios that could appear. Second moment, we've got the European Central Bank statement that was really dovish, and investors currently treat it as step into easing policy. That in December, European Central Bank could cut the rate even more, providing more stimulus, especially on the rising concern on the spreading of the virus, and that will press on the euro currency in the nearest few months. Finally, the soap opera with the stimulus almost is over. As we said, this was the crucial time for the stimulus. Tuesday, Wednesday, no decision has been made, and that tells that results probably will be postponed on the next year, so we will get some stimulus only in 2021. If all these risks will be realized, then the demand for United States dollar and sitting in the safe haven assets could last a bit longer than usual. That will press on the markets across the board. So our dependent on external driving factors that really have very limited chance to forecast, makes ability to forecast the overall situation in the markets a bit limited. So as you can see, for example, this is daily chart. Last week we discussed when the stimulus still was in the discussion, and this rally was based on expectation of the stimulus. We suggest that maybe market will challenge the 120. Once the stimulus will be eliminated, as you can see, market collapsed immediately. So overall price behavior currently is driven totally by fundamental events. So taken all together, overall situation currently stands, of course, in favor of some further drop on the market. although we haven't got the double report as pretty as it could be, if, for example, we'll get the challenge of the 120 and then collapse could follow. In this case, the double repo on the weekly chart could look much better. But currently, we still have theoretically the double repo on the weekly chart. We have the second close below the 3x3. And the fact that we've got very strong sell-off, this could tell you that it might work. In general, even without the double repo taking into consideration this A, B, C, D pattern, our target still stands the same. Mostly we expect the reaching of the 114.80, 115 area within the few weeks probably. Because on the weekly chart, the market is not at oversold, and we have the major OP. With this acceleration on the CD leg, these chances the market will reach 115 are significant. Meantime, on the daily chart, we could use the same pattern, but with the closest standing target. Minor target here is the COP, as you could see. It's 1634, and market stands very close to it. And also take a look, market stands at the daily oversold. So maybe, while the market waiting on results, maybe market could get some technical reasons for show the minor pullback. We do not expect that will be some reversal of the rally, or rally on the euro currency. It could be triggered only by some strong fundamental events. There's no technical reasons to suggest currently that it could be reversal, because we have no real signs that the market's preparing for reversal. It means that if any reversal will happen, it will happen surprisingly, unexpected, and by some breaking news probably. But as it looks like right now, the downward action should continue, but in the beginning of the next week, maybe Monday, Tuesday, we could get some relief here. So on the 4-hour time frame chart, you could see that when the market stands in a strong tendency, usually it keeps harmonic swings very accurately, as you can see on this sell-off. And that led us to suggest that if pullback will happen, the first harmonic swing stands 1685, the first level. If harmonic swing will be doubled, the market could reach the next confluence resistance in 117, approximately 1750. Let's take a look. It also agrees with these broken lows. Another support that we have here is you measure this XA swing. It's 127 extension stands at the same level as the COP on the daily chart. So initially it was our gut list cheaper to buy. If you remember, this XOP target was standing and we said this probably pullback could happen. But later market has just collapsed, and now you can see some kind of the shape of the butterflies is forming here. So that's our view currently. So we think that it would be better to not take any bets on surprising factors that could reverse situation drastically, because it will be kind of the gambling. It would be better to wait when this will happen than trying to take the position on some pullback. Overall background stands bearish here on the euro currency, and in the current circumstance, we think that it would be better either sit on the hands and wait for strong support if you would like to buy. This is weekly 115, 114.80 area. It's the next level where you could consider taking the long position. If you'd like to go short, you could just consider maybe this pullback that could happen in the beginning of the next week. And that two levels that market could reach on the technical bounce up from the 1630 area.